Hello and welcome back to the channel with me, Fawad Razaqzada, StoneX Market Analyst. Once again, it's the surge in crude oil due to the ongoing situation in the Middle East, which is causing all sorts of volatility for risk assets, triggering another sharp sell-off for European equities and currencies, as well as metals prices as well. So let's go straight to the source and try to make sense of the market moves today. Energy markets are firmly in focus as the worsening conflict in the Middle East rattles investor confidence. At the center of the attention is the Strait of Hormuz, the narrow waterway through which roughly 20% of the world's oil supply passes. Any threats to this choke point immediately raises fears of supply disruption. Following the joint US-Israeli strikes on Iran and the subsequent Iranian retaliation, oil markets have reacted aggressively. Brent crude has surged around 15% this week, testing the key $85 per barrel level today, which is the highest level since July of last year. The concern is straightforward. If supply is disrupted, the market tightens very quickly, and there are talks of oil potentially reaching $100 per barrel if the situation deteriorates. Natural gas has also spiked after drone attacks forced Qatar to halt LNG production. Given Qatar's importance as a major LNG exporter to Europe and Asia, prices reacted sharply as well. This combination of rising oil and gas prices is reigniting inflation concerns, and traders are now pushing back expectations for interest rate cuts in Europe. And that's weighing heavily on equity markets, as well as the currencies like the euro and the pound. The German stock market has taken the brunt of the sell-off, with the benchmark DAX index down around 4% today, breaking through several key support levels in the process, including the low from February at 24,200, which is now an important resistance level to watch. The German stock market has taken the brunt of the sell-off, with the benchmark DAX index now down about 4% today and breaking through some key support levels in the process, including the low from February at 24,200, which is now an important resistance level to watch. On the downside, 23,480 is a potential support level, followed by the 38.2% Fibonacci retracement around the 22,950 level. Markets are right now being driven entirely by energy prices, and nothing else seems to matter. So let's take a look at the chart of Brent to determine the important levels of support and resistance. Technically, Brent oil remains biased to the upside after the breakout this week on the back of the supply disruption fears. At $85 per barrel though, Brent is now at an important psychological hurdle where we could see some profit taking. However, should prices dip, the downside could be limited while tensions in the Middle East remain high. The first level of support now to watch comes in at around 82.15, marking Monday's high point. Below that, you have the $80, the next psychologically important level, which is key. Below that, 76.70 is now the line in the sand, and a break beneath that would suggest a deeper pullback and potentially shift the short-term structure. For now, this remains a geopolitically driven market. Energy prices are setting the tone, inflation concerns are resurfacing, and equity and FX markets are reacting accordingly. As always, stay nimble, watch headlines, and manage your risk carefully. Thanks for watching, and I'll see you in the next one. Take care.